Welcome to this video on investing strategies for your Roth IRA, focused on guiding young investors through maximizing their financial future. Let's dive in and explore how to make the most out of your Roth IRA. In today's video, we will cover several essential topics. We'll start with a brief introduction to the Roth IRA, move on to discuss a sample investment allocation, touch on key considerations for diversification and rebalancing, explore some alternative strategies, and conclude with some important reminders. So let's get started. The Roth IRA is an individual retirement account offering tax-free growth on your investments. This makes it a particularly attractive option for young investors who expect to be in a higher tax bracket at retirement. Now let's discuss a sample investment allocation for your Roth IRA. We have FXAIX making up 75% of the portfolio, covering the S&P 500 and offering exposure to large U.S. companies. Then, FSPSX represents 15% and focuses on international developed markets, allowing for geographic diversification. Lastly, QQQM makes up 10% of the portfolio, tracking the NASDAQ 100 and offering exposure to major non-financial companies. Now that we've discussed a sample allocation, let's look at some key considerations. Diversification is essential for reducing risk by spreading your investments across different asset classes. Rebalancing is important for keeping your portfolio on track, involving adjustments based on the performance of your assets. As you get closer to retirement, it might make sense to shift your allocation to be more conservative, such as increasing exposure to bonds. When it comes to investment alternatives, consider the total U.S. stock market using a fund like FSKAIX for broader exposure, or the total international stock market with funds like FTIHX for a complete international approach. A three-fund portfolio can also provide simple diversification. Adding bonds introduces stability, and lower expense ratios help keep more of your returns. Global market weight helps you balance U.S. and international investments effectively. Let's test your knowledge with a quick quiz. What percentage of your Roth IRA sample allocation is recommended for international developed markets? Here are your options: 10%, 15%, 20%. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer to our quiz question is 15%. In the sample investment allocation we discussed, 15% is allocated to international developed markets using FSPSX. Let's wrap up with some important reminders for managing your Roth IRA. Always consider using investments with lower expense ratios to maximize your returns. Balancing your U.S. and international investments will align your portfolio with the global market weight. While a mostly hands-off approach is advisable when young, it's also essential to periodically review and rebalance your portfolio. In summary, maximize your Roth IRA by adhering to strategic allocations while embracing periodic diversification and rebalancing. The three-fund portfolio offers a simplistic diversification method. Lastly, minimizing expenses can yield higher net gains. Thank you for watching the video. If you enjoyed it or found it helpful, please like, share it with others who might benefit, and subscribe for more content. We would love to hear your thoughts in the comments below.